Hey everyone, this is Kirk here again at Option Alpha. It is Tuesday, the 6th of September. Had a pretty wild couple days here, heading into the long Labor Day weekend. And so, no particular order in this video tonight, just want to get some sort of update out there, I guess, to you guys. I know that everyone loves these videos, so want to get one out. There are some things I wanted to chat about tonight with regard to the market. The first thing I'll start off with, and then we'll just kind of go through a bunch of things in no particular order. But you can see this is actually a chart that I posted last week about investors starting to close losing positions. And by that, I meant that anytime we get a huge rundown like we just had, and this really goes for any type of sell-off in any market or anything. Anytime we get such a huge rundown, you're naturally going to have bottom feeders, which come in and support the market, which we saw back in, kind of early August heading into the end of August. And the market ran up. And I had posted this chart saying that this is a major area of support resistance right here at 1225. And what I was saying here is that most investors who are long the market above this area just saw their investment go south big time, 20-25% depending on where they were at. So considering that they saw that go down to 20-25%, they're going to be looking for any reason to get out at zero. And that's no different than anybody else out there in the market, right? If you have a trade on and you're losing money, if you can get back to nothing to kind of break even and maybe even a small loss, then you're going to start selling your position, get out of the position and kind of take your licks. And that's just naturally what happens with technical analysis and support resistance. So you can see that we moved right up to that level and then we started moving away from it. Actually, it's even more defined here on the trading charts, if you can see this up here. But you can see that on the S&P, we moved right up to that same region and we've now moved away from it. So again, all these things, they're very, I guess, easy to see if you know what to look for, if you can keep your emotions out of it. You can see these patterns very clearly. You can see these support resistance lines very clearly. So that's just interesting. I think that if we come back down even further, then we'll obviously settle a little bit on 1125 on the S&P, and then we'll just have to wait and see where we go from there. If we break down lower, it could be very tough. We could be heading for 1,000 very quickly. The other things I want to look at tonight, Bank of America and Greece. And I actually have up here via Bloomberg the CDS on each of these, so the collateralized debt. And what this basically is showing is the cost to insure against a default of either of these things. So Bank of America, and then the cost to insure against the default of Greece. What's interesting about all of these is that they obviously have taken record moves. And you can see Bank of America, the cost to prevent default or insure against default for most of the bondholders is pretty significant now. And it's had a really strong jump just since August. So it had a little bit of a jump in June and a little bit more in July, but really you can see it's almost doubled since August. And this is really, it's really sad because I guess Bank of America is could be the next Lehman. Who knows? They're obviously not doing well. There's a lot of rumors floating around about them. Their stock on a 5-year chart that we're looking at here is virtually tanking. And but who knows? Warren invested in them, right? For Greece, same thing. Greece has been on an uptrend for the last 3 years, really. It's been steadily climbing, little spikes here and there, but again, continues to climb. The cost of protecting against default for Greece is astronomical and really just doesn't even justify the returns that you're getting to a certain degree. So you can see that when this starts to happen, where these spreads, these CDS spreads start to really widen on these countries and banks, that's not good. And it's kind of reminiscent of what happened a couple years ago. You look back in time and virtually almost the same thing kind of happened then, where spreads were very wide. Let's look at Bank of America and see if we can see that. But you see where spreads were really wide. Yeah, exactly. So 2008, 2009, again, spreads were very wide on Bank of America. The cost to insure against default was very high. So again, we're getting back into that same type of territory, which is typical of a bear market. of a bear market really starting to take off, and this just kind of dovetails on each and every security that's aligned with it. So when one becomes more pricey than the next and the next and the next, and it just kind of is a huge domino effect that we have to worry about. For the charts, got a good move in the VIX today, which is helpful, and we're still above a couple support regions, which I've highlighted here in black, and we'll stay above there for the foreseeable future. I think we're range bound to the top side almost exclusively right here at 47.50, which is good. So it gives us some room to trade. I definitely think that any type of option selling strategy right now is really good because you can take advantage of this high volatility. So anything that you can play as far as a short and volatility is going to be a great strategy for the next couple months. So keep some cash on hand as always, as I've continued to tell my members. We have very light positions for this month. We rolled one lower this morning just to get away from the market more, but we have a lot of cash on hand, and really that's the best thing you can do is pick and choose your entries here. Don't get too greedy. Realize that you want to give yourself a lot of room and a lot of movement in the markets until things calm down. But having cash on hand is going to be the key. Those people with cash on hand, when things start to really fall apart, are the ones who are going to really take advantage of the low prices and high volatility and just great opportunity in general. So as always, I hope you guys enjoyed this video, and happy trading.